Employee ownership suggests a company that is either wholly or majority owned by or on behalf of its employees. Now, if you're an owner that's thinking of retiring, you may be attracted to employee ownership because you may see it as a more attractive form of future ownership for your company compared with the alternative of selling to a third party. There's actually a strong range of evidence which shows that employee-owned companies tend to be more successful in a number of ways. One of those is that they are often more productive. There's also some evidence showing that in harder times, including the most recent recession, employee-owned companies have been shown to be more resilient. Employee ownership can take three main forms. So the first of those is to have employees owning shares individually, and they'll have their own share certificate showing a personal ownership stake in the company. An alternative, and probably one that's simpler to operate but not necessarily right for every company, is not to have any individual share ownership but to have all the ownership held on behalf of employees through an employee trust, and that's often called the John Lewis model. The third possibility is to have a combination of the two. So you could have some individual share ownership but always retain a block of shares permanently held in a trust on behalf of the employees. There are now two tax breaks. So the first of those is aimed at company owners wishing to retire. So if you're a company owner and you sell a controlling interest, in other words more than 50% of your company, to an employee ownership trust, then you will be entirely free of capital gains tax on your sale proceeds. So that's great news if you're a company owner, but what about anybody else? Employees, for example. Well, if you're an employee of a company that becomes employee owned through an employee ownership trust, again, if the trust has a controlling interest, more than 50%, then the company can pay you an annual bonus free of income tax. Now, there is a financial limit on that, which means that the maximum annual bonus you can be paid is £3,600. I wouldn't say that any company should become employee-owned purely because of the tax breaks. So you always need to make sure that it's going to be the right thing in your own company. That said, if you decide it is right for your company, then the existence of the tax breaks may be something that tips the balance in its favour.